I find with doing these events that a lot of people show up from different backgrounds, and basically I would like to tailor the discussion to those backgrounds. I'm not going to be using a microphone, so as well, if you could kind of maybe keep side chatter down at least for the first 10-15 minutes while I get through the talk, and then we'll go to questions and just kind of do a chat. If you are filming, please, let me have a copy of that. We're filming ourselves. So we're Vanbex Group. We're in the back office here temporarily, but we're moving out soon into our own space. We're growing very rapidly. We're a professional consulting group for blockchain services. So we do everything from marketing, we do smart contracts, we audit smart contracts, we'll build wallets for clients, and we'll do a lot of work in that capacity. We also have some other exciting in-house projects like Etherparty, which is a visual smart contract creator that's launching next year. And basically, we do a lot of blockchain stuff. And we're really kind of active in the ecosystem, doing events like this, and growing the blockchain community. So that's Vanbex Group. A little bit about myself. I kind of went down the blockchain rabbit hole at the beginning of the year, and I started to learn a lot more about Ethereum, decentralized applications, smart contracts, what all that means, and I was kind of hooked. I'm on Reddit, I'm on Medium, I'm on Twitter, I'm reading everything I can all the time, and it hasn't even slowed down because the space is expanding. There's a lot of really exciting technology happening right now. And basically, I'm kind of hooked, and I've kind of taken the role of the head of communications for Vanbex and doing these talks, building community events. I've been to a lot of events in the Ethereum ecosystem, which is an ecosystem that's very hot right now. It has about 30 times the developers than any other blockchain ecosystem. The people that are in that ecosystem are very good people, with a very strong vision about what the future is going to look like. So it's been a great time for me, and it's a pleasure to be able to kind of share some of my thoughts with you all. So I'm going to talk a little bit, again, that disclaimer, no price talk. I am relatively serious. This isn't like a how to get your Bitcoin wallet talk. This is about how the technology is going to shape the future. So I just want to kind of remind you guys about that before we do a Q&A. So you can't really talk about blockchain technology without talking about what it is and why it matters. And I kind of like to view blockchains as languages. So blockchain networks, protocols, these are languages. And they're languages of value that sort of govern how we transact value. And the most exciting thing about them is that they're decentralized. So I'll talk a little bit about what that means later. But first, I just want to prime the talk by talking a little bit about where we are right now, kind of, as a society. Let's loosen up a little bit and just think conceptually about what we can do with value and how we can transact value. So just want to throw it out there, some questions to think about just to get your mind in gear. So can you send money, Canadian dollars, to anyone in the world like that? Let's think about that. Why? Why not? Can you create your own money? Can you create a small little kind of pool of money, the capital, assets, whatever you want to think of it as, value, and can you kind of control that pool of capital? Can you opt out of a monetary system? Can you, as a Canadian citizen, can you say, yeah, I want to work for you, but I don't want to be paid in Canadian dollars. I want you to pay me in, some other currency. So you kind of have to think about what is money? So it's a medium of exchange, it's a store of value, and it's a unit of account, which is just another way to say that it is a measure of how we value something. Money is a language, it relies on trust, and it allows us to collaborate and scale our endeavors with one another and other groups immensely. So it's been a great enabler. But some of the other properties of money today are the money that we currently have, Canadian dollars, US dollars. They're centrally controlled, and they're issued. And we vote people in, but we don't really have a control over, what happens with that money. We've seen some interesting stories with Zimbabwe, Venezuela, and there's a lot of people that are out there in other parts of the world that we would refer to as maybe third world that are struggling with these very issues. The other thing that money is it's authoritarian, so that means it can be censored. When I brought up, can you send money to anyone in the world? Well, you can't, because some places of the world we don't agree with, and basically our Canadian dollars can't penetrate, or maybe they can't get far enough into rural communities. It's also, money has been kind of weaponized to surveil. So what I mean by that is that, we have debit cards, credit cards, and we've seen the Equifax kind of stuff happen. It's getting really messy. And I think that, sure, you can paint this as tinfoil hat territory, but it's not. It's actually happening. This is real stuff. And if we ignore it, then we're sliding down a slippery slope. Another thing is money is it's kind of a form of debt slavery. And don't pull back because I use the word slavery, but we do pay some debt in interest when we earn in our Canadian dollars. It's always deflating. Something that was 5 cents 100 years ago and $1 20 years ago is now $5. So where are we paying that interest to? And are we making those agreements, or is somebody else? It's also a system of control. So I'll kind of leave it there. And I want to kind of circle back and say, what does this have to do with blockchain technologies? Like Bitcoin, like Ethereum, these are cryptocurrencies, sure, but they're also writing all of the transactions to a blockchain. And that's kind of where the name blockchain came from. Blockchain networks are simply languages. In the ecosystem, we call them protocols. We call them networks. We say they're decentralized. I'm going to unpack a little bit about what that means. So these properties, decentralized, what does that mean? It's flat. It's a completely flat hierarchy, flat system. No one node on the network or one user with an account is more powerful than anyone else. So that's a really powerful concept. In fact, it's one of my favorites. Ownership is secured on a blockchain network like Bitcoin or Ethereum with cryptography. So you maintain your private key, which is the thing that you use to sign transactions to move value out of your account, which is revealed to everyone with a public key. So imagine a glass mailbox with a slot that allows anybody to put mail into the slot. But you're the only one with the key that can open the bottom and take out a letter or some money and send it off to another glass mailbox. And the reason why I use the glass mailbox analogy is because everything is out there, open to be inspected. Sure, with a public account that's a crazy string of numbers and letters, you would have to find out which one is in fact my wallet to find out just how much Bitcoin or Ether I have. But that's relatively easy with today's sort of data collection and artificial intelligence. So another feature of blockchains, these public blockchain networks, is that they're public and they're permissionless. That means anyone can join. So you don't have to be a Bitcoin citizen to create a Bitcoin wallet. Anybody can do it in seconds. And that's kind of exciting. Essentially, all you need to get started is a software client. You simply download some code, and you have a client that speaks the protocol of the network, and that basically gives you that ability to sign transactions, to send value, to earn value, and then to decide where it goes. So it's important to disambiguate, like, where does this term blockchain come from, and what is a blockchain? I keep using blockchain network, blockchain technology, blockchain protocol. But really, the blockchain itself is just a product of those networks. It's a product of those protocols. So blockchains are a historical record that is produced by the protocol. It's immutable, which means that it cannot be changed. So it's transactional, transactions are made, and they're built up over time, and there's receipts for every single one of those transactions. And once those receipts are included in a block, they're cryptographically sealed to the previous blocks, and they're chained forever. And that's where the term comes from. How does it get built? Well, the network that I've been talking about, the protocol, all of these users that are running nodes in a decentralized flat hierarchy, they're incentivized. They're incentivized by doing some work or putting some stake into the network, and they're incentivized to validate transactions and validate them correctly. And if they don't, they get punished. And they get punished by having that work become useless. There's no chance to win any Bitcoin block reward. There's no chance to win the Ethereum block reward if you validate transactions incorrectly, if you try to falsify transactions, if you try to censor transactions. And that keeps everybody in check. And what we arrive at from this technology is we arrive at consensus. What is consensus? It's consensus about the update to the blockchain. It's consensus about what next block of transactions will be included in the blockchain and accepted as the next sort of not a single source of truth. I'll disambiguate that in a sec. But it's trusted as the source of truth. It is believed by the entire decentralized network in all of their copies of the blockchain that these transactions are valid. There is consensus among all the actors in the network. So we don't have to vet any participants in this network. Anyone can join, and the network keeps them in check with these economic incentives. If you try to falsify transactions, your transactions will not be accepted by the network, and you will never win any economic reward for doing that work. If you wanted to control one of these public blockchains like Bitcoin or Ethereum, you would go broke trying because of the value that it would take to co-opt a large enough portion of the network to convince the other nodes on the network, the other users, that you are in fact validating and verifying transactions that are true. So in order to achieve that dominance, you'd simply go broke. There's some market forces at work here. So really then, what is it all? When people are talking about blockchain, they're talking about blockchain technology, they're talking about blockchain networks, it's a combination of a lot of technologies. And all of them existed before, but they've now been carefully put together in a system that is gamified to be fair, to be trustless, to be accurate, even if there are bad actors on the network. And these technologies are distributed systems, it's market forces, it's game theory, it's cryptography, and all of this comes together to create trustless digital value and enforceable digital scarcity. So we can now scale value globally exactly like the internet scaled information. And this is the big point. So this is beyond efficient payments. It's beyond supply chains and making them more efficient in small little consortium groups. This is the ability to potentially take your Facebook data to another Facebook. And Facebook can't do anything about it. This is the ability to not have to choose between Uber and Lyft. It's just riders and passengers talking the language of value, which is, I need a ride, you've got a ride, there you go. It's Airbnb without the Airbnb. It's not hosts and guests on Airbnb. It's just hosts and guests. Basically what I'm saying is it's free markets all the way down. And if you thought that some of the stuff that I talked about earlier about money was an affront to capitalism, it's not. This is the real capitalism. This is real free markets. Nobody's intervening. There is no central control, and there's no cronyism, and there's no corruption. It's all out there in the open. So we now have an effective way to exchange value through these kind of market systems. But historically, markets have had their inefficiencies as well. But these came from transaction costs being very high. It came from counterparty risk in sort of holding an agreement for days on end until somebody was willing to buy it on the other end. And they're centralized. They're run by organizations with the same inefficiencies found in governments and handling our own current monetary supply. This technology enables provably fair, free and open markets. It creates fluid systems that can achieve consensus among all parties involved in the transactions. It's a global network of trust and value. It's open to anyone. It's controlled by nobody. It scales how we organize, govern, and create value. So this is really the frontier of a new way to organize companies. It's a new way to organize social institutions and social impact. It's a new way to organize how we govern ourselves as nations and as individuals. This is programmable global capital. It's taking over. I encourage you to learn about it. Welcome to the decentralized future. I stole that line. But thanks. That's my talk. So I see some questions. We'll take these questions right now. We're going to continue on. Feel free to leave. I just ask kindly that you keep your voices down so I don't have to shout too much. And we also respect the space, although they have to listen to me. So, yeah, we have a question.
So the technologies, underlying technologies, cryptography, distributed systems, all of these things have existed for many, many years. So what has triggered for this blockchain idea to kind of start and mature now? I mean, all the things you've mentioned, these were feasible, let's say, 20 years ago. So how does this all coming together now?
Right, and there were a lot of systems, even proof of work, which is the mining system. I can handle a mining question if somebody's going to ask it, I know. Basically, proof of work is this mining that gets done in the Bitcoin network. It's essentially a way to randomize who's going to win the economic incentive. Proof of work has been used before, but it wasn't used in the consensus of a distributed system until Bitcoin proposed it. So to a lot of people in the space, that was the real breakthrough. But yes, all the other technologies, they've been around for a number of years, and it's simply the clever kind of positioning of all those technologies together that was outlined in that Bitcoin white paper that really made all of the people in cryptography and distributed systems go, aha. People have been trying to do their own digital money that is not centralized for several years, and the projects have always been shut down because there was a single point of failure. So there's eGold project and Liberty Coin and a bunch of others. So yeah, thank you for the question. Yep.
So right now there's a lot of mining, a lot of investment in electricity. But what's the next step after mining? If I have a use case, just say digital identity, I don't want to have a mining infrastructure around that. What are my other options that I can look at right now?
Sure. So mining is obviously really expensive. There's been a lot of news articles. Some of them are just kind of a bit kind of fear-mongering about how much electricity it takes. But definitely it's not efficient. I personally, I'm excited to hear about green solutions. So some of the solutions that are coming really revolve around what's called proof of stake. So it involves you staking a certain portion of your cryptocurrency or whatever the currency of the network is, staking it, locking it up, And based on that percentage, that's how many transactions you will get to verify and win a reward for as a percentage of who else is currently staking on the network. So that's called proof of stake. There's already proof of stake systems in the wild called delegated proof of stake. But really, we're looking for delegated proof of stake involves, yes, this flat decentralized layer, but another layer of what's called supernodes on top of it. Some people have a bit of an issue with that because there's now kind of a two-tier system. Basically, there's a really good sort of set of talks and papers about a proof of stake that is coming to the Ethereum network called Casper. And I would encourage you to kind of check that out. Thank you.
What do you mean by that? I've been reading a lot about this, but mining is, I'm lost on it. What are you actually doing when you're...
The mining question. All right.
It's really basic.
OK, guys, let's do this mining question. So basically, there's this entire flat, decentralized, distributed network. It's just a bunch of computers strung together, talking the same language, messaging protocol. How do we validate transactions and get the entire network to agree? Basically, we need a way to kind of keep these miners honest. So these miners are the ones verifying transactions, but they do this other thing. They mine. And what is that? So basically, if I want to send some Bitcoin to Patrick sitting up in the front here, basically what I'm going to do is sign a transaction with my private key, the key that I have that I hope nobody else has. That transaction is going to get announced to the network, and one of these nodes on the network is going to bundle it into a block. Then the block is going to be announced to the network, and the transactions just come out of a pool of transactions that are waiting, they're pending, they're waiting to be verified. So they get all bundled up into a block, and the block gets announced to the network. Now, what happens at this point? How do we pick a random winner who should win the reward for the block? Well, every block, if you hash it using basically cryptography, so you just put it through a cryptographic hashing function, you will spit out some signature. And it's essentially a number. If you hash it with another number, you will, and that number keeps incrementing. It's called a nonce. It's like a single-use number. If it keeps incrementing, with the block data, you keep hashing with this integer, like 0, 1, 2, 3, 4. That will always produce a different signature. What the miners are looking for is they're looking for a number that fulfills a property. So they're looking for that number that they can put together with that block, hash it, and produce a number that fits a mathematical property. It's usually a certain number of zeros. So you're basically looking for a magic number. Yes, it's a completely useless transaction. But what does it do? It guarantees that no one single node on the network can always be the one to win the reward. If they were, they would always be the one that would be the one verifying the transactions, which would end up in a lot of trouble. So once one of the nodes on the network, and it's always going to be a different node every time, once one of the nodes has successfully found this number that fits these properties by choosing a random number and hashing the current block, they announce to the network. They say, I think I've got this number. And the network can check very, very fast and say, yep, looks like you won. So you made it past the post first. Now, what have you done in that process? You burned a lot of electricity. True. It's called proof of work. You put in the work. Now, if it's found out to be that the transactions inside the block are not valid, that miner, despite coming up with the correct number, has an invalid block, and they lose all of the electricity that they burned, because remember, it's like a function of a percentage of maybe winning this reward. So they've now lost, right? They've lost the reward, and the network kicks out that block and says, no way, we're going to look for somebody else that actually has the valid transactions and the number that we're looking for. So that's how the punishment happens. And basically, when somebody does hand in both the number and the block correctly, they win the block reward. So there's the economic incentive to actually do the mining in the first place. Once basically that block is accepted by the network, it's said to be finalized. And then if you've ever heard the term confirmations, that is just blocks finalized on top of that block. Once it's in the blockchain, it's hashed again, and the hash is chained to the block that came before it. So I hope it is a very complicated, weird process, but I hope that kind of gives you some of an overview. And it's just, for me, I just like to black box it and say, OK, it picks a random node every time, which keeps the whole network honest. So there's an economic incentive to do mining. There's also an economic disincentive to falsify transactions, censor transactions, say you have 1 million Bitcoin when you really don't. So I hope that kind of clears it up. A lot of questions from that section. Let's take one from the back.
What applications does your group work on mainly with blockchain, and what do you think are the ones that are coming out of left field people don't anticipate the applications of blockchain?
Cool. That's a great question. So what applications does Vanbex currently work on? We work with clients doing all sorts of stuff. So one of our last clients wanted to have basically, they wanted to create a marketplace for virtual in-game assets. So these are non-fungible assets, like if I play a game for a certain amount of time and I level up and I find a magic sword or something, I can now take it out of the game onto several different websites and marketplaces. I can find the best price for that sword, and I can sell it to another user who can then jump back into that game, and maybe across games. So I think it's going to affect that. So we also work with companies that are just trying to basically improve their existing IT infrastructure when it comes to supply chain, transparency and provenance on supply chains. We do a lot of different projects. Where do I kind of think it's going? Well, we have seen a lot of people piling on to the public networks. That's about as far as I'll go into that discussion. A lot of people are piling on to these public networks, but there's no real application value there. If you look into smart contracts, if you look into some of the work that's being done in Ethereum or the Internet of Agreements by Vinay Gupta, these people, yes, they're looking 2, 3, 4, 5, maybe even 10 years down the road. But these applications are coming where we as sovereign individuals can engage in economic transactions that are global and engage in agreements. So I've seen insurance projects, I've seen lending, I've seen a lot of stuff. I've seen a lot of these white papers, and basically, I don't really know how to answer the question. I'd say, every industry should really put their head down, rethink their business model, and think about how maybe a public and inclusive business model where their customers can actually kind of take an ownership of the company and become part of the model is exchanges. You need them to be on board in order to recognize your currency. Otherwise, it's a bunch of nerds typing in some command line arguments, sending value to each other, and signing transactions. Without a public exchange, you can't really get recognized. You can't really have everyday users onboarding into your new fork of the currency. Basically, yesterday, Coinbase announced Bitcoin Cash. So it's something that happened. I don't really care. It's an event. But because of that announcement through the most popular exchange with the most users, and the fact that now when users log into Coinbase, it's not just Bitcoin, Litecoin, and Ethereum. It's 4 choices instead of 3. Obviously, this set off a frenzy. I'm not talking about the price. That's the end of that fork discussion. Yep.
What are the analogies you see between what it was like in the dot-coms in the late 90s and what's happening now? The dot-com was all about a new method of distribution, from physical to online. What is the blockchain and what is it doing? And eventually, most of the startups, not talking about prices, they went up, but basically they went bust. And it was mostly the big companies, already publicly traded companies, that adopted the dot-com and have taken that on. What's the future like for blockchain?
That's a great question. So what's up with the internet analogy? Are we in 1994? Is it 95? Is it 96? I was young. But I have, having a computer science degree and being in technology and being to a lot of events and stuff, I have backfilled that knowledge. So I'm going to try to speak intelligently about it. So what really happened? Why did everything go bust? I think we all know the loose story. Basically, a mass adoption was not there yet. People were not prepared to buy 20-pound bags of dog food on the internet. And companies like Pets.com went public. They rode this big roller coaster of internet, and they went bust because no customers, no applications, no value. Are we seeing some parallels today? Absolutely, 100%. I alluded to the fact that there are no real blockchain applications yet where I can, sure, I can buy a few things online to some very progressive online retailers. Maybe I can buy some expensive stuff in Japan with Bitcoin. But we're not really doing B2B. We're not buying, barrels of oil. We're not settling up at ports around the world in Bitcoin. And until we get to that level, then we're not really going to have like an infrastructural sort of capital value layer there to support all of the speculation that's going on. So yes, it's early days, and there are some definite parallels. What's different about the technology is that instead of simply putting your information online and being able to kind of access documents that somebody has written from anywhere in the world, you can now put your value online. You can stake some value. You can say, I'm willing to put some money on this, and you don't have to trust the other people or the other parties on the other end of the transaction. So you can basically do this with anyone. A lot of people in the ecosystem also are trying to take this as an opportunity to bring back an internet that was the original vision of the internet. So the original vision of the internet was it was a World Wide Web of a bunch of decentralized nodes of information that would all agree to transact and share the information. But it didn't happen that way, did it? And with stuff like net neutrality kind of, I'll put it eloquently, being rammed through, it's not a good look for the internet. A lot of the centralization of data and pooling and these giant warehouses of data, all of our value is now inside those data centers. So a lot of people in the community are talking about decentralized virtual private networks. So how do we make sure that net neutrality is not a slippery slope to Canada getting its own, Great Wall of China internet? How do we do that? So we're talking about decentralized virtual private networks to protect from any one small group of actors deciding, how we exchange even our information. So I hope that kind of gives you a bit of context there. So we're trying to get back to that original vision. Yes?
What will happen with blockchain and Bitcoin and other cryptocurrencies? For example, if one player, a government, will take more than 50% of computational power in this network?
That's a great question. So what happens if one state actor, and it would require the amount of capital that a state actor would have access to, what would happen if one state actor decided to buy a lot of the mining pools involved in Bitcoin, which would give them more than 50% of the network share, which would allow them to basically create any kind of transactions they want? What would happen at that point? Well, basically, I mentioned forking before. We're always free to go off to another network. And what we've seen sometimes in the cryptocurrency space, again, holding back here, about price talk, when something is perceived as having bad technology and it's not trusted, you see everyone flooding out of that currency. And because it's early days and there's no underlying assets there, that basically devalues, it debases the entire thing. So yes, someone could totally do it. In fact, Apple could just buy probably the entire Bitcoin network. But it wouldn't be very good, would it? Because it would centralize it. And the people that originally came and invested in Bitcoin, the real hardcore guys heating their apartments in 2009 and 2010, they have a lot of Bitcoin, and they will abandon it. They will fork it. They will build whatever they want to call it, Bitcoin impenetrable or Bitcoin classic, but they will leave. And so I don't believe that that's a major threat. It's always a threat, though. Yes?
So I heard that in China there's like massive computer systems mining for Bitcoin. What chances do we have of actually getting any mined Bitcoin when we have China that's, and I've heard that basically large investors here have put together computer systems and it burns up so much electricity that they can't afford to keep it going, so it shuts down. And China is just this juggernaut going ahead. Have you heard anything?
Yeah, so what happens, so basically China, it's obviously quite a force for producing chipsets, which are, basically they're tuned to do this Bitcoin mining. They're very efficient. Well, China's also kind of, they've kind of banned Bitcoin, but what does that mean? Well, they didn't ban it, they nationalized it. So basically, they're slowly trying to actually just rein in the Bitcoin mining operation. Yes, they want more, but so does Russia, so does Japan. I'm not sure which one, but I heard figures like 300 million, 100 million invested into Bitcoin and cryptocurrency mining. So there's a lot of interest there for sure from state actors. You can check at any time. You can just go online and you can check where the mining is happening. So there's a big pie chart. It's very colorful. There's some large slices. Yes, some of those are in China, but there's also a bunch of little slices. And again, I just would have to say the same answer. Basically, if there is a threat to the decentralized nature of the network, if a couple of these actors can collude and get access to over 50% of the network, we can always move.
So what are you offering from your company? Do you offer to help buy these things?
Buy cryptocurrencies? No. So we are building, we're building technologies for companies that want to basically build their business model. They want to build things and transact on blockchain. So they want to build essentially inclusive business models. They want to build up a network of people that are going to transact in a certain way. I mentioned, in-game economies is in fact a huge industry, but it's all centralized and siloed. So some people want to create kind of like a protocol, like a base layer, so that we can kind of bring all of these in-game assets together. So we consult, we help companies do that. We don't do any wallet stuff besides making wallets for people.
So if you're
No, it's okay. Go ahead. I'm just trying to remember.
The idea when you mentioned was the elimination of all brokers, where something like an Airbnb or Facebook, you just hop on and you engage with somebody, you create your own network,
That's a great question. So I mentioned basically blockchain technologies, protocols, smart contracts, an internet of agreements that maybe we could get away from intermediaries. I don't mean all intermediaries, maybe intermediaries that don't add value. So we can keep things decentralized, we can keep things trustworthy and kind of flat and transparent and honest between all these parties. What a lot of the startups in the blockchain sector are doing, and in fact, Ethereum actually operates like this today with its core developer group, is they're setting up a nonprofit foundation that's kind of like a steering committee for this decentralized network. And basically, slowly but surely, they're trying to bake more of the governance and more of the agreements about how to upgrade the network into the actual network itself. So you don't have to remove all intermediaries, and there will always be the need for these developers to get paid. There will be the need for people creating really great experiences to get paid. And in fact, maybe there are some cases where you need arbitration. You need people to handle claims and disputes. Now, that could be done in a centralized way for sure. You could have a body that always handles those claims and disputes, and that's how the network operates. Or you could come up with a very clever and gamified and economically incentivized way for the users of the network to rein in on these disputes with their expertise. So
that Facebook could completely transform into a blockchain environment. I mean, it's a total disruption of their model. And so could Airbnb, and I'm sure they're researching it now, how the potential is and where their risks are. But do you think there's a potential, and how long would it take for a Facebook or this is a big question, how long would it take for a Facebook or an Airbnb to transform to that model? At the same time, they're kind of cannibalizing their existing model. Is that possible, or are they more likely to be disrupted with another one that has an equally great experience?
that's a great question. I'm going to give you something to take a look at, which I think would actually that walks through that exact kind of process. It's called Tokenize the Enterprise. So if you Google that, it's a great article, and it walks through how an Amazon or a Facebook or whatever might go about. These are early days, so I guess my short answer is I don't really have an answer. I don't know how long it's going to take. It's early days for the technology itself. It has scalability issues. It's got a lot of not security issues in the blockchain network protocol itself, but with people writing these smart contracts, there's been some oopsies that have locked up a lot of money. It's very early days for the development ecosystem and just building these applications. So it's very difficult to answer that. But Tokenize the Enterprise, it's a brilliant article by Trent McConaughey, and it's really good. So I'm going to open it. I'm just going to try to answer as many as I can. 5 more minutes, and then we'll just wrap it up.
Quick question. With the cryptocurrencies, their value is based on people's trust, correct? So there is really no backing on anything other than I trust that somebody going to purchase my Bitcoin at some point for more than what I purchased. Don't you find that really high risk to even promoting it that as something that's viable, other than there's a frenzy of people purchasing something that has no backing? I grant you that our normal money has no backing in gold or silver anymore because it's gone fiat since 1912. But there is still GDP that counts for something, that our money is based on GDP. So what is your advice if you're thinking about it? People going out and purchasing, I know people that in my office that are more second mortgaging their house to buy Bitcoin.
I wouldn't do that. Yeah. So the question was basically about what's backing these cryptocurrencies and how high risk are they. I'm not going to give anybody any advice. This is the disclaimer. I am not a financial advisor. Blah 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 blah. But essentially, I would say that what is backing this price is the technology that I alluded to before. The ability to transact with any individual in the world, peer-to-peer. This is the vision of where we're going in the blockchain technology space, in the cryptocurrency space. This is why people believe in it at its very core. Yes, it's early days. There are not applications built on it. I've said that twice already. And I would just say, be careful. I don't know. I'm not going to talk about price swings or anything like that. But thank you for your question. And tell those people that the second mortgage their house, whoa. Pump the brakes a bit. Deep in the back.
I have two somewhat different questions. The first one is, what do you think the future of work looks like for blockchain? You guys have what seems to be a sort of consulting shop to do blockchain work. In the future, if there's more mainstream options for all things blockchain, the same way that people draw parallels to mobile coming out, and now there's mobile dev shops and specializing in mobile marketing and making create a whole ecosystem of work. What do you think the future of work looks like? Who are the players and the people that are actually going to be working on blockchain? And then maybe I'll ask the second question after.
Sure, yeah. So what will the future of work? So I'm going to split that into two things. So future of work on decentralized applications, protocols, blockchains. What does that look like? What kind of applications are we going to build? What kind of skill sets are we going to need? What are we going to require to build these systems? So it's important to note, I was on a call this morning actually with somebody that just wanted advice about this very topic. It's important to note that there's really actually very little coding going on the blockchain because storage is expensive. It basically it needs to kind of just be the settlement layer. So there's very little coding that's actually on chain. That being said, what does get coded, that does get deployed on a global public settlement layer like Ethereum, that's generalizable, it's like this global settlement computer. What gets deployed there needs to be very, very, very secure. So there's been some oopsies, there's been some lockups of funds. So security and auditing the code is huge. It's a big moneymaker in the space if you want to really level up your skills. Some of our guys actually are big on Reddit as well. They get approached on Reddit. They're earning $450 an hour just looking at people's smart contracts for like a couple hours. It's a crazy part of the space. So security and auditing of the smart contracts themselves. What else is happening? It's basically economics under this big economics umbrella. So we kind of talked about how the network functions on a basic currency sense, like this proof of work, incentives and disincentives to basically participate in the network. Well, what happens when you start to do prediction markets? What happens when you start to do, insurance? What happens when you start to do, you need a vehicle registry? How do people pour this information into the blockchain, right? And where is it stored? That's kind of a software architecture thing about how you bridge the on-chain and off-chain networks together. But how do you build that model? How do you build that model where your network, just like when fax machines were introduced, they became more and more valuable because people bought fax machines? How do you make it so that every person that comes onto the network, whether they're a user or a miner or whatever, actually creates a value for people being on that network? That's a very hard question to answer. So it's about crypto economics. That's a new term that's been coined. But there is a field that's already established in economics called mechanism design, and it's basically inverse game theory. It's starting with the solution that you want to create, and then working backwards and backfilling the mechanisms that you need in your protocol to get there. So I'm going to also just take this time to say, what does the future of work look like for industries that are outside of blockchain but maybe adopting blockchain technology? I think personally, I'll just give my personal opinion. We're already moving to like a more of a freelance kind of gig economy, and I think that this is definitely going to basically just dump a huge can of gasoline on the fire. It's just going to take off. So I think that area is really important. So I mentioned decentralized insurance. What about, so why do I need a bunch of claims adjusters that are kind of chasing people around for information when I could just throw it to a network of people that are going to gig it out for me? And they're going to arrive at consensus, and they're going to do it for a lot less. So I can't tell you how to create that perfect system, but I can tell you that that's a model that some people are interested in looking at. So you had one other question.
Yeah, the other question was around the issues with some of the notable cryptocurrencies we've seen around scaling the high transaction fees. And I think I've heard about a bunch of technologies that are being proposed to try and solve some of that. I wonder if you could elaborate on that.
Sure, that's a really broad question, but I'm just going to kind of quickly like overview it. So yes, there's other technologies like DAGs, sorry, I'm all about decentralization. Directed acyclic graphs. There's DAGs, there's Hashgraph, there's this Tangle from IOTA. Yes, they're trying to address the scaling challenge, absolutely. They are having their own technical challenges, so I can't cover it all, but I would definitely advise you to dig deeper on those technologies. They're new, very new. The scalability issues around blockchain are basically, there's scalability, but how do you scale transactions without sacrificing security? There's a lot of issues there. There's three sort of areas of improvement for the Ethereum network, and that would be moving things to state channels, side chains, or Lightning networks. That is one. So basically moving the computation off-chain for transactions to do very fast transactions, and then settling on back on the main chain when it makes sense. There's sharding, which means that only small groups of the network will verify everything, but it's enough of the network mathematically to sort of achieve a decentralized consensus. And there's also plasma, which is very deep down the rabbit hole, but that it should help allow smart contracts to basically create their own chains and do very fast settlement back up to the main chain. So I hope that kind of gives you an overview. Just want to say we are running out of time, so I'm just gonna wrap up the talk now. We'll just conclude. I'll hang out for a bit if you have any other questions. Thank you everyone for coming. Thank you WeWork for sponsoring it. It's a great space. Come to a tour with these lovely ladies. Hi. Check us out online. We are Vanbex, VANBEX.com. Thank you. Yes.
So how can I get the recording of this?
We'll put it up somewhere. Yeah.
Yep. Let's start.
Yeah, I do. They're at home.
I'll give you mine.
I'm simply Matt@vanbex.com. Yeah, I can take yours too. Yeah.
Because I'm a real estate agent and I have